I'm just going to briefly state the Commission's view on the current problems. So on one hand, the increased economic integration, especially in the EU, of course, globalization leading to increased capital mobility, and on the other hand, the outdated international tax system, still residence source based on arm's length principle and based on bilateral treaties. And together, this leads to increased possibilities for multinationals to escape corporate taxation through tax planning. This in turn gives incentives for governments to engage in tax competition, either through a decrease in rates, what we've seen over the past decades, really. And it's true, corporate tax revenues have been relatively stable, but maybe there are also reasons for that. And more recently, competition has taken place less through tax rates, but also through specific tax regimes, and often also non-transparently through specific tax rulings given to multinationals. And the main concerns with this are concerns of fairness, concerns that, or perception that corporations don't pay a fair share of the tax burden, that there's no level playing field between multinationals on one hand and domestic or smaller firms that cannot engage in these type of tax planning activities. From our perspective, we also see a problem within the EU where we're trying to establish a solid single market, but companies active in several EU member states still face very different corporate tax systems, and therefore they face high compliance costs, tax compliance costs, and other tax obstacles such as double taxation or certain discriminations of cross-border transactions compared to similar domestic transactions. And we see problems with certain distortions in the tax systems, the distortion to financing decisions, distortion to investment location, and the size of investment. Okay. And so our objectives in the tax reform agenda are to ensure, first of all, effective taxation, so basically to put to create the conditions so that member states can effectively tax corporations, to also protect in a certain sense the EU from competition from third countries and from multinationals locating or shifting their profits outside. Another objective is then to create a better business environment, so relating to these high tax compliance costs. And a third objective to enhance transparency, which might not be an objective in itself, but rather one that feeds then into the effective taxation. So that's a diagram basically summarizing this, and the idea of having these three elements of effective taxation on one hand, a better business environment, and the transparency measures which together should contribute to the goal of fairer taxation. And of course there's a question in itself, what does it really mean, fair taxation, which is an interesting one, but I'm not going to go into this now. So let me just present, there's a very rich agenda at the moment, also from the Commission's side. And I'm only going to present a few elements of that. So in June last year, we had an action plan for fair and efficient corporate tax system, and there were 5 areas of action outlined there. And the idea of this action plan is that on one hand, there are more short-term actions, and on the other hand, there's a long-term action, and that one is supposed to be the CCCTB, so the Common Consolidated Corporate Tax Base. And the shorter-term actions focus more on already existing initiatives to improve those. They focus more on the BEPS agenda, on finding an EU approach to this BEPS agenda to ensure coordinated implementation. And an important element in this plan is also the transparency elements. So a few of these actions have been put in place, and maybe I should also say, of course, from an EU perspective, there are two things that should be kept in mind. First of all, if from the EU's point of view we act, then we should also have a mandate to act, so we are bound by subsidiarity principles. We address issues that have inherently a cross-border element, or where there's legally also we have the power to act. So we need to justify this. And the second one, that's for our proposals, but our proposals are not just proposals. We hope that they will be adopted. But adoption in the direct tax area means that we need approval by all member states. So that's, of course, a large hurdle. And the actions that we have been taking so far relate to transparency measures. So on one hand, there has been last year the adoption of the automatic exchange on advanced tax rulings, so that tax administrations automatically exchange this information. And a second proposal adopted this year in May on multinationals having to submit annually tax reports to tax administrations with tax-related information country by country, and this information is exchanged automatically between tax administrations. And there's a pending proposal which has been adopted by the Commission, and that one is to make basically these reports also publicly available. And there's a second proposal that has been adopted last week only. That's the so-called Anti-Tax Avoidance Directive. So this is a set of measures that relate to the BEPS agenda. So it's basically the implementation of BEPS in the EU, not all elements, but some of them. So there's a controlled foreign company rule, there's an exit taxation rule, interest limitation rule, a rule on hybrid mismatches within the EU, and also a general anti-abuse rule to ensure that each member state has a rule to act against artificial arrangements. So then a few words also on the relaunch of the CCCTB, which is planned for still this year. So we are currently working on an impact assessment for that. So it's important to recall that there is already an existing CCCTB proposal that was made in 2011, and that this proposal, okay, I guess I don't have to explain to this audience what are the elements really of the proposal. That's based on common tax-based rules for all EU member states, on consolidation and formula apportionment. But maybe important to recall that this formula apportionment was based on three factors. So there was equal weights on assets, on non-financial assets, on labor split by payroll and wages equally, and on sales by destination. And at the time that was viewed as the formula that was best suited to avoid certain issues with factor shifting, etc. In this context. Tax rates would still be set by member states under the system, and the participation was completely optional for all companies. And the objective at that time was really focused. There was not so much of the whole tax avoidance debate that we have today, but it was really on the business friendliness, on the removal of cross-border tax obstacles. Since then, we've new additional objectives that I've already just outlined. So the CCCTB is supposed to help in fighting tax avoidance, and as new objectives have also been identified, the addressing of the debt bias, so the different treatment of debt and equity in the tax system, and also to ensure sufficient incentives to invest in R&D, because if this corporate tax system replaces existing systems, and existing systems in the EU member states often provide specific incentives for R&D, then one should think about, if we replace that, what do we offer in this area? So following these new objectives, there are basically two key changes to this existing proposal, and one is that there would be some mandatory element, because if the CCCTB should do anything about tax avoidance, inherently needs to be mandatory, because no company will opt in and then lose their tax planning benefits. And there are several options on the table on how to define this mandatory set of firms that would be obliged to apply the CCCTB. And it was also announced in this action plan that the EU would take a step-by-step approach, so that in the first step, a common base would be agreed, while at the same time working on this implementation of the BEPS agenda and an EU approach to that. And then in the second step, one would have consolidation and formula apportionment. And then on top of these two key changes, it was also announced that there will be measures in the CCCTB to address the debt bias. And we have had a public consultation where you can see the kinds of proposals that are out there, so an allowance for corporate equity, non-deductibility of any interest are maybe the two most prominent ones there. And also this element of having sufficient incentives for R&D to at least not deteriorate the current incentives that are there in the corporate tax systems.
Thank you very much.